Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory in Birmingham. Today is Tuesday, June 2nd. I thought I'd come to you with a brief update on what's going on in the markets today. It is a positive day in the market, continuing a streak of positive days that we've seen over the past really couple of trading days. We are up about 40 basis points today. That's 0.4% up to about 30.68 on the S&P 500 for a level. So once again, well off the lows and really continuing an impressive rally. The market's really focused on just efforts to reopen the economy around the globe. They're seeing not just in the United States, where we're starting to see states like New York and California start to lift restrictions and bring their economies online, which is obviously important for our domestic economy. But we're seeing it internationally as well, whether it's Singapore or Hong Kong or some of the other major international markets that are starting to ease restrictions and bring their economies back online, which is really, I think, helping to fuel the growth narrative, or at least the recovery narrative, which is also helping to fuel the stock market returns. That's not to say, we're also seeing, I would say, encouraging data on the virus front itself. So we continue to see total cases get lower every day on a global basis and here domestically in the United States. We continue to see death rates drop, which is great. After we've reopened several portions of the U.S. Economy and seen the overall virus loads continue to decline, I think that's giving people a lot of a positive view. That's not to say that there aren't some viral hot spots, if you will. Texas and Florida have a little bit of elevated cases currently. Brazil and Latin America are still in the sort of teeth of their outbreak. But I think globally, the market's focused on the global number, and the global number tends to be good. The current social unrest that we have seen over the past couple of days is not impacting the markets. The markets are looking at that as a very temporary phenomenon, and which I believe is probably the right call. If we think about the market being focused 6 to 9 to 12 months out, you can understand why that the riots that are going on currently and the curfews and lockdowns as a result of those riots aren't anticipated to impact that sort of 6, 9, 12-month outlook. So something that's dominating the news cycle away from the virus, but not something that's dominating the market's attention. Last but not least, we're seeing a pretty strong rotation over the past couple of days into more cyclical stocks, more value stocks, and away from the sort of growth and technology stocks that had held in pretty well over the course of the cycle. So, when everyone was locked in their homes, everybody was investing in Facebook and Netflix. As people are getting out of their homes, you're seeing a lot more buying of the more industrial, the more financial, some of the smaller cap names. And that's actually a positive sign for the market. It indicates that the market is, the market participants do believe that economic activity for those beaten down sectors is going to pick up. So with that, as always, if you have any questions, please don't hesitate to reach out to either myself or your advisor. I hope you have a great week, and I look forward to talking to you again soon.